Hi, Tiffany here. In this video, I'm going to go over tax planning and investment management for a Canadian citizen that is moving back to Canada from the US. My goal with this video is to go over what are the things that you need to know in order to prevent costly mistakes. Hi, I'm Tiffany Woodfield, a cross-border financial advisor and co-founder at Swan Wealth Management. Over the years, I've spoken to hundreds of professionals with cross-border investments. There seems to be a lot of confusion over what to do with investments and registered accounts when they move back to Canada. As a Canadian moving back to Canada from the US, there's three main things that you need to know about: cross-border investment management, taxation of your non-registered investment account, and retirement planning. If you have substantial assets, all of these are equally important. So let's get into it. Once you move to Canada, your US advisor is restricted from offering advice to a non-resident of the US. This means that you are at risk of your investment firm giving you 30 to 60 days for you to either find another advisor or they will liquidate the account. This can be a major taxable event and you would want to prevent it. A solution is to start working with a cross-border advisor before you move. Just make sure that they're licensed in Canada as well as the US. And if you work with a portfolio manager, they can create an individualized portfolio based on your needs and goals. In addition, if you work with a dual licensed financial advisor, they can produce 2 full sets of tax receipts. This may not seem like a big deal, but it is. When you hit accounting season and tax time, your accountant would have to cross-check all your investment taxes for Canada and for the US if you don't have that full set of receipts. Having them means you save money. If you're a Canadian moving back to Canada and you still have your green card or you're a dual citizen, you have to be careful that you don't invest in anything that may be considered a PFIC. Common things are Canadian mutual funds and Canadian ETFs. When you have a taxable investment account and move to Canada, if you keep some of these holdings, what happens is you now have to track 2 different cost bases. Let me give you an example. Let's say that you bought a stock in the US for $100, and then that stock was worth $200 when you became a Canadian tax resident. You go to sell this a year later, and now that fair market value is $300. What happens is you've got a cost base in the US of $100, a cost base in Canada of $200, and then you sell it for $300. That sounds confusing. You've got a capital gain that's different in both countries, and you've got 2 different cost bases, not to mention 2 different currencies. It is much easier if you can get a financial advisory firm that can track the 2 different cost bases in those currencies and help you provide the slips for the IRS as well as for the CRA. Now, the only time you wouldn't have to track these 2 different cost bases is if you were no longer considered a US person. So let's say you were a Canadian citizen only and you went to the US with only a working visa and you never had a green card and you weren't a US citizen. But again, just make sure you're on side with the IRS as well as the CRA. When it comes to retirement planning, you're going to want to make sure that you time those withdrawals to make sure that you're minimizing tax. In addition, if you worked in Canada as well as the US, you've likely contributed to Social Security as well as the Canadian pension plan. Both of these have different rules, so you want to make sure that you maximize the benefits and follow through with each of these. In addition, often clients will come to me and think, well, what do I do with my retirement account that's in the US now as a Canadian resident? It's important to make sure that you do follow the rules. And one important thing to take into consideration is it's rarely tax neutral to roll an IRA into an RRSP. So make sure you speak to your cross-border team ahead of time. Ideally, you should find a cross-border advisory firm that can help you with your entire picture. This is important because you've got assets in Canada as well as the US and pensions in both countries. At Swan Wealth Management, we can help you manage an RRSP, an IRA, a Roth IRA, and a tax-free savings account, among other non-taxable accounts. It's important to get a team that's dual licensed in Canada and the US because it'll make your life that much simpler. At Swan Wealth, we offer comprehensive cross-border wealth management. This involves tax planning, estate planning, financial planning, and investment management. If you have $2 million or more in investable assets and are looking for a cross-border advisor, we recommend you schedule an introductory call to see if we can help. Click the link below to start the process of finding the right cross-border advisor.